Hello, this is Blake with Financial Markets Language, going over the market activity that unfolded February 23rd. The Dow Jones was up approximately 33 basis points or 0.33%. The S&P 500 was up just a little bit over 50% at the close, and the NASDAQ was up a little over 75%. Definitely was a better market day than we had 2 days ago, and better than the kind of muted action we had yesterday. In general, we kind of saw the same trends as yesterday more or less unfold. We had the dollar, the Dixie, continuing to move up at a slow pace, now marking new highs, I believe around the 104.75, which is a new high in the last 2-month period, so it definitely continues to be a higher move. The 10-year slightly moved higher, not as much. Definitely got a little bit of cooling down in the way that bond yields have been rising recently. As far as the data that came out today, the initial joblessness claims came in a little bit under expectation, but just barely. And I don't really predict this to make much of a move on the needle of how inflationary the Fed views the economy. It was a miss by, I believe, around 3,000. So relative to the last few data sets that we've got, this really doesn't move the needle at all. But as far as the GDP, we did get more of a revision than most people. If they typically on the revisions, it's more or less just plus or minus 0.1%, if anything. Most of the time it's the exact same. But we did get a move down of 0.2%, so just a little bit outside the norm, but yeah, still well within reason, and still shows a largely growing economy. Growing at over 2% per quarter is still widely regarded as a great quarter. But take in mind, the previous 2 quarters were both negative, and the quarter before that and the quarter before that were barely positive. So, we've kind of been on a sluggish to downtrend, and now we got a little bit of a kick up, but we're still obviously not as high as where we were GDP-wise. And take in mind, GDP is calculated nominally. So obviously in an inflationary, over time, GDP will only get higher as inflation continues to go higher, even if it's at the normal, Fed target of 2%. Obviously 2% compounded over a certain amount of years will naturally just make all transactions in an economy more expensive, causing the GDP to naturally raise. One notable earnings that came out last night that ended up continuing to precipitate into today, that was more or less big news, was the NVIDIA earnings. It was just a slight beat on earnings, but their guidance was way higher than expected, which caused the initial pop after hours yesterday, which was rather large, I believe it was 7.5%, which is definitely quite a pop for a stock that's was at one point almost $1 trillion stock. Now it's sitting market cap wise around $580 billion. So quite a big move for a stock after hours. But we actually saw this rally continue into today, and at the end of the day it posted up practically 15%. I believe it was 14.8. So quite a big move in NVIDIA stock. Commodities more or less kept trend with the previous day, with the dollar rising. As the dollar continues to rise, commodities dropped. You saw a small, and today was even more muted than yesterday. But you still saw across the board, everything in general was down just less than 1%. But yeah, in general, commodities were down today. As far as tomorrow, we definitely got some big news coming out. We have the PCE data, which is the main data that the Fed looks at regarding inflation, coming out. So this is going to be big news for everyone. Big things coming out to look for is the month over month and the year over year. And the core PCE for January is expected to be 0.5%. Take in mind, it is February now, but obviously all the data that is released is the previous month, because we don't know what happened this month until the month ended. But it's expected to be 0.5, which is higher than the previous month, where it only moved up 0.3 month over month. So obviously annualized, if you annualize 0.5, that's 6%, which is way higher than our current PCE, which means that currently, PCE inflation, the main, underlying producer inflation is going up. And the previous month, year over year, PCE was sitting at 4.4%, and it's predicted to stay at 4.4%, assuming the month over month comes in at 0.5. And honestly, given the rest of the results for January, I do believe that the point, if I were a guessing man on this current PCE coming out, I would imagine that tomorrow's PCE will be a little bit higher than last month, but not by much. So I think that the current estimate is more or less what I would estimate at this current time. Other big things to look out for tomorrow is consumer spending, which is determined in a nominal rate, and month over month it's expected to be 1.4%, where consumer income is only expected to be up 1.2%, which, take in mind, last month nominal spending was down negative 0.2%, which is definitely unusual for a December month. Typically you have more, and now we're expected to get a massive 1% jump month over month, which, annualized, you're talking over 13% increase in consumer spending. But also, it appears that nominal incomes are going up 1.2%, which is higher than the December 0.2%. So definitely showing a little bit of wage inflation, assuming those numbers come out as accurate, which, I mean, in this particular data, it's kind of hard to guess at this point, because we had the January jobs report come out so hot, so wildly higher than expected, that because there's so many more people in the labor force, I mean, do you really expect everyone in the labor force to be getting paid? Like, if they're hiring this many people, I don't think there's that much of a wage pressure to get it up that high this quickly. But take in mind, I mean, if it does come out this hot, that is extremely inflationary, because that means that we massively overhired in January, and we massively bumped up wages in January, which is the exact opposite what the Fed is looking for in the labor market, obviously. The last two data points that are coming out today are tomorrow morning, are new home sales. Take in mind, all the other previous data points I announced are coming out at 8:30 Eastern, and these next two are coming out at 10 p.m. Eastern, or 10 a.m. Eastern. And these two will be consumer sentiment and new home sales. Consumer sentiment, I feel like in general a lot of people overlook it just because it's not as accurate as a lot of people hope, and it's definitely a little bit biased in how it's recorded, so there's just not as much attention given to it, but it is expected to tick up. But take in mind, I think, given all the previous data, that's more or less expected, given that, massive new hiring, way higher than expected, and it's already looking like the current prediction is that wages are going to go a lot higher, spending's going to go a lot higher. And then obviously I'm personally watching the new home sales. Out of all the real estate data, I feel like it's the least important of just about all of them, but it's definitely still important to show, because the type of clients that would buy new homes are typically the more affluent clients that have more disposable incomes, and that's been the main demographic that more or less hasn't really been impacted, hasn't really been crushed by this inflationary cycle. If you look at like many businesses, a lot of people are, the ones that are really succeeding are the ones that are targeted towards wealthy clients, or wealthy customers, because the ones that are more targeted at the average person's just gotten squeezed on necessities and other things. So take in mind, that's why we have the current investment rate and the current savings rate in the US at like a 20-year low, which is crazy, because take in mind, even the upper class people are getting squeezed, but they're just not downsizing on their lifestyle. They're instead downsizing on their investments, where you have middle and lower class people downsizing on investments and downsizing on lifestyle. So you definitely have, until you get everyone to start downsizing on lifestyle, at least for a little bit, that's gonna probably be the deal breaker that finally gets us that last little bit down to 2%. But I imagine that that's probably not gonna show, and it appears from the data that we're just gonna get a slight tick up. So if anything, slightly more, inflation, but in the grand scheme, you're looking less than a 1% jump, so that's nothing. And also, different months can definitely have different sale results depending on what time of year buyers want to buy houses. Thanks for watching this video with me. I believe that's all I have to report for now, and tomorrow we'll be back going over exactly what happened in the market as far as the dollar, the averages, any in particular stock moves, in addition to all the data that I mentioned that's coming out. Look forward to seeing you then, and have a great rest of your day, and best of luck in the markets.